Here's where we are going to go into what's happening with OPEC, what's happening around the world. One of the big things that has been talked about is that gas to oil switching. How much of that is happening? Where's coal right now? And that's something that we're also going to talk about more in the Econ show because it is important for economic development and growth as well. So one of the things that we also wanted to touch on briefly, and we'll do a bit more on the Econ show, there's an increasing dynamic between Saudi Arabia and what's happening with Lebanon. So Saudi has now pulled its ambassador from Lebanon and requested that for consultation. There's some concern about Iran's increasing influence within Lebanon. There was an extended gun battle within Beirut. So again, this is going to be some more tension as we head into the OPEC meeting. And then when you look at what happened where a Vietnam flagged vessel went into Iranian waters and they boarded an oil vessel. Now, apparently the U.S. was tracking it, but nothing happened because the Vietnamese vessel ended up in Iranian territorial waters. So again, it's not something that we could go into, but then that becomes a much bigger issue. So those are things that are just being watched right now in terms of some of the events that are unfolding. Now, one of the importance is when you look at what's happening within Gazprom. So when you look at some of the flows in general, there was a near all stop going from Russia into Europe. And one of the bigger, and again, there's you could say this is nefarious and Putin is now using this as a means of playing hardball. But at the same time, they've also said that they're going to increase flows on November 8th. So this could be a let's stop flows into Europe. Let's fill everything that we can in Russia, and then we'll start what we promised on November 8th. Again, we're not going to know this until we get to that point because this is Putin we're talking about. This is Russia. So again, we all need to see. It could be the 11th hour. It could be 11:59 November 7th. Then they say, oh, by the way, based on what we promised to ship you on November 8th, we need Nord Stream 2 passed. So again, this is just going to be an important thing to watch going forward. And you can see here that Gazprom controlled storage sites in Germany are much less full than the rest. When you look at where things are in general, and this isn't the importance, obviously everything remains low, but it's the Gazprom side on the German and the Austrian level that still remains at the lowest. And this is where you get some of the concern of how much fuel oil will be necessary, or gas oil, and based on just the country that we're talking, the region that we're talking about. So that's where you'll see fuel oil continue to get exported, and you'll see that demand remain elevated for gas oil, which is what we've seen an increase in imports coming from OPEC nations, or I should say the Middle East, as well as from the Middle East and Asia. So then when we look at some of the other important backdrops heading into OPEC. So OPEC, as we all know, meets tomorrow, November 4th. So it's going to be a very interesting meeting because one of the things that is the bullish spin is that OPEC nations right now can't meet the quotas that they're allotted. Now, that's the bullish side. The bearish side is, well, why would they try to meet quotas if they can't sell the reduced amount? And that's where you get this how the spin market. Like, how do you want to spin it? Is it oh, well, they can't meet their levels, or hey, why would they pull from natural storage, which is underground, to then put this into the market and struggle to sell it and hurt realized prices? So you can play it on both sides. Now, with that being said, it is an interesting backdrop because Angola can't meet what is be viewed as their spare capacity. Nigeria can get close, but as we've highlighted in previous shows, Angola's not getting to where we think it is. So just using some rough estimates of what expectations are for spare capacity, especially when we're looking at OPEC, when you look at let's say Angola is capacity is at 1.2. I would say it's probably closer to 1.3, 1.4, but it's not getting to 1.7. Like, that's just not going to happen. Nigeria is said to be at 1.6. That's probably closer to where things are. I would say that they could probably get to 1.7, 1.8, depending on what the mix is, but you're not going to 2.1, which is the place that they were before. So again, there's some of that contraction that we're seeing in West Africa, but they're struggling to sell current flow. Like when you look at Angola's producing 1.1, and they still are struggling to sell. So why am I going to produce at 1.3? It doesn't make any sense, So there's some of that mixture. So when you look at Nigeria, why am I going to pump at 1.6 when I can't sell 1.4? And that's where you're getting some of that backdrop in general. So when you look at the changes, you can see Saudi Arabia added 601,000 barrels a day from 6.2 to 6.88. When you look at the Caspian, the CPC, you went from 200, increased 280 Russian Urals. When you look at the UAE going from 2.9 to 3.1, that increase in general. Russian Far East. The Russian Far East is the important one because that is where we're seeing a lot of the demand, especially for China. And that's going to be, I think, one of those pivotal sides. And then obviously the Gulf of Mexico continues to see that drop. Libya is going to have that pivot lower based on those issues that we've talked about with the pipelines. But then when you look at where some of the drops have come, obviously North Sea had some normalization after they had that big increase from the pipe coming back. That's still at an elevated level, but again, down September into October. But then when you look at Iraq was struggling to sell. That has some of that has been pushed into November. And then when you look at West Africa, that's where we see the biggest drop of that 513,000 barrels a day. And it's not because they don't want to, they're struggling to sell it. And you can see the Middle East and Russia is taking some of that flow, i.e. the Saudi. So that's where you want to look at how is this moving? How are the movements adjusting? And what do we expect happening going forward? And now it's also important to understand that China's refiners are set to they halted the export of diesel, allowed the export of gasoline, but they kept export quotas the same at about 243 million tons as this year. So 2021 and 2022 are the same, but there's more capacity coming on from the teapot side, and all of them are big mega facilities. So it just shows that they're going to, again, displace some of the smaller and really support some of the bigger entities. So then when we go into the total OPEC backdrop, so total OPEC output, and now remember what we were talking about before, the previous slide was flows, and this is now production. So this is really looking at what is hitting the open water, how much is heading into the water, how much is being moved throughout the system. So like when you look at the UAE sitting there pumping, exporting at 3.156 million barrels a day in October, exporting at 3.156 million, but then you look at production, well, the UAE in October is at 2.84. So they're exporting above their production level, and that's what we've been trying to hone in on. Yes, obviously production is important, but you also have to look at what is happening on the export side. So when you look at the total OPEC output, you can see that there was only an increase of 140,000 barrels a day, with the biggest decreases coming from Nigeria, Gabon, and Angola. Again, West Africa struggling to sell. The estimated capacity of that 1.2, where is some of that estimated capacity to come from? So again, that's where you're getting some of those adjustments lower. Saudi continues to see that steady increase. Total OPEC, as you can see, was really driven by Saudi coming back. UAE had a small increase, but a much bigger increase on flows. So that's that backdrop in general. So now we have India, who has now cut taxes on gasoline and diesel. Diesel excise duty cut by 10 rupees a liter, gasoline by 5. Reductions to boost consumption and keep inflation lower, because inflation was really starting to ratchet up from the end of October into November. And they've also had a big spike in tax receipts, which also freed them up to do this small cut. And the idea or the hope is that this may increase their purchasing because it'll pull through some of that capacity in general. But I think some of the movements that we've seen within India, based on what Kairos was talking about, a lot of that can also be, some of this quick movement of product from storage into the open market to cover what is expected or hoped to be a big increase in total consumption. So these are going to be some important factors as we head into OPEC. We expect a 400,000 barrel a day increase, again, just steady state. We don't expect 600. We don't expect 200. Again, just staying the course with that very steady increase of production month over month. And then when you look at what does that mean? So the Saudi crude exports in October rose to the highest since April of 2020. And that's why it's the most important when you look at what does that competition look like, how much of that is going to continue to go through, where OSP is going to shake out. Because if you start cutting taxes on one end to increase adoption, adoption into India, the worst thing Saudi could do is increase OSPs, because now what benefit you've gained is now gone because you're going to increase the official selling price. Now you can increase it, and then it can trade below it. We saw coming out of Korea has offloaded their 350,000 barrels a day, a monthly allocation of Murbain into the open market, into the market that was bought by China. They sold it for a 10 to 13 cent premium to OSPs. Again, this is just kind of that rejiggering of what are the demands of crude, how much crude is moving into different locations. But again, you're seeing some of these pivot points where it's not really an increase in demand. It's just a shifting of the type of crude demanded. And I think that's an important caveat in what we're seeing on some of these flows. Now, coming into the U.S., so the U.S. had a small decline of 53,000 barrels a day of gasoline, a small decline of distillate exports of 71,000 barrels a day. That's something that we expect to continue. Gasoline should see some support as Latin America gets better, but distillate, again, staying difficult. And then when you look at propylene, yet a small decline of 15,000 barrels a day, still elevated. And then when you look at total crude oil exports, they were up 138,000 barrels a day, just above where we were expecting. Again, the top of end of our range, averaging in that 2.8 million barrels a day. So then when you look at October loading shipments to clean fuels from Asia to the Americas, we're stable at that 425,000 tons. That's going to continue. And then when you look at November loading cargoes on the route, were also unchanged at 70,000 tons. So China has effectively eased its tight diesel market after top producers increased supply under government coordination. India's diesel sales rose back to above pre-COVID levels for only the second time since the pandemic, as refiners boosted runs to meet rising demand at home and abroad. So again, there's also Indian facilities that are focused abroad, so they're still going to continue to ramp that. Middle Eastern oil product flows into Europe, mostly middle distillates, again, poised for that increase in October and then again in November. So we should get those final numbers as we come into the end of the into the next week. And then what does the next flow look like as we head into November? Some of the difficulties that we continue to see is the spread. So when you look at the difference between Dubai and WTI, we're anywhere between $5.30 to $5.60 more expensive. And when you look at where that was previously, that was in 2013. So you're getting an idea of just, again, how cheap Dubai is to the U.S., which is why we're just not seeing Asian buyers at this point, and why you're seeing that increase in exporting flow versus production. So you have production, which is at one end, and then exports that is at the other. And exports remain robust, which again is also putting pressure on the Dubai realized price, but keeping the U.S. fairly capped. And the same thing is playing out in Brent as in North Sea Europe. When you look at just how there's not a whole lot of movement, which is keeping people away from Asia, and that's when you start to see this struggle, because West Africa is trying to clear into Europe and into the Atlantic Basin, but they're struggling just based on where some of these deviations are, especially when you look at the backdrops between between where these shipments are moving to and what that price looks like. Because why am I going to buy Nigerian if I can buy Dubai? based on pricing, how much does it cost to bring some of this Nigerian crude over, this Angolan crude. We had two Angolan crudes clear into to the Atlantic Basin. Those will be incoming, and we're still going to see some of that steady imports into the region, but it's going to be at a price. And if you look at what Asia is willing to pay for, well, why are you going to come here if I can go to Asia shorter distance, and then you can get a slightly better price in general, just given, the shipping times, the insurance levels, some of those key factors. So gasoline, as we've been saying on the export side, is just going to be along the 5-year average. And the reason why we'll see that steady move up is just going to be because Latin America is getting a bit better, which will help pull some of that additional into the south. Now, disti, we normally send into Europe for the most part. It's going to flatline for the most part and just stay within this level. We don't expect it to get back to the 5-year average over the coming weeks. Then when you look at ethane had a spike. That's going to continue to be robust as we have a new facility online, and that petchem demands and plastics demand still remain strong, and we still see that getting pulled into the Asian nations, and most importantly, China. When you look at the U.S. crude oil export, again, just flatlining for the most part. We just expect it to be here, remaining at that level. So on a 4-week rolling average, we're at 2.822 million. That's 22,000 barrels a day above our top line. We just expect it to, again, just go sideways. When we look at propane, still above the 5-year average. We expect this to be elevated again, but the concern is going to be where are prices, how competitive is the Middle East looking to get to try to protect and maintain some of those flows, especially when you look into both Korea, Japan, China, and India at this point. Now, when we shift to Europe had a small decline of about 530,000 tons. So again, something where we expect it to be below that 8-year average, but just hitting those highs, not really going back above, but just staying around here. And then there's been a big increase in floating storage. So some of that floating storage is going to get purchased into some of these areas, and you're going to see some of this competition, which again is going to keep these tanks fairly normal. Again, below that 8-year, but still within that construct. When we look at overall, gasoline had a big increase of 139,000 to 905,000 tons. When you look at naphtha, fairly flat. Gas oil had a drop of 148 to just over 2 million. Fuel oil had a small drop. That's going to continue to get exported. So when you look at the gas oil side, we just expect it to be flat. As some of the additional cargoes that were kicked out in October start to show up in November, what showed up in October, we expect this to just trend higher, but at a very slow pace. And then you have refiners ramping up a bit, making a bit more gas oil, which again is which you're seeing in some of that gasoline side, which I think as they approach that 1 million ton, that's when you could start to see some of the options open up to send some additional into not even just the U.S., but also into Latin America. Here's the gasoline side. You get that big spike. We were expecting it to follow that 13-year average. Instead, it spiked well above. This will normalize. They'll try to manage this in general, but again, we don't expect it to continue up any much higher. But if anything, fall back closer to that 5-year, to that 13-year. And fuel oil is still draining, but at a fairly moderate pace. This is something that I think they're going to look to try to accelerate as the arb still remains open between Europe and Asia. Now, when we look at Singapore had a build of about 1 million barrels into storage. You can see most of that was driven by the middle distillate. So here's where, when you look at the last 15 years, we expect it just to hang just above the 15-year average because there's enough demand to keep things moving out, but you're having that refiner response, especially when you look at India, South Korea, which is where you see some of this end up. So again, this is going to be fairly stable, a very positive mood if you go forward. But it's going to be weighted towards middle distillate and that heavy resid, as light distillates still remain elevated. We don't see this coming back to the 13-year average, but still, again, going sideways, creating that chevron pattern. And And then you look at middle distillates. This is the one that we thought was going to trend much closer to the 15-year average, sorry. It's getting there. We based on where some of the new flows are going, and where things are, it will likely not get back to that 15-year average, but stay just below and kind of have again that really not newer highs, not newer lows, just maintaining that steadiness throughout. The resid side is going to be the one to watch because China's keeping that import quota the same at 243 million tons. They are importers of fuel oil, of resid. So based on that, not seeing that increase, some of that mixture of what is Pakistan doing, what are some of the Central Asian nations doing, this is something that we think stays above the 15-year average and is a bit of a ding into the view of that gas to fuel oil, just because this should be coming down if you're seeing that extension. Again, it's November 3rd, but this is going to be the one to watch to see how fast is that adoption into some of these emerging markets. Now, when we look at total flows for October, you can see that October had ended up at that 11.9 million barrels a day. You had that big increase in Russia, Norway staying strong. And then when you look at Nigeria coming in about 1.5, Angola at about 1.147, Libya had that small drop. But then when you start looking into November, Russia's already kind of posting up what they're putting out there, and there's a decent amount. So you'll see some of that added. Will likely get above 4 million barrels a day going into the open market. Norway, I think, is going to be fixed there. Nigeria, we've already had some slippage of deferrals from November into December. That is starting to get reflected. Same with Angola. So you're starting to see some of those shifts in general. But when you look at the underlying flows, so Senegal reduced its offer price for a cargo of Girasol crude for December loading. 1 million barrel cargo for crude loading was offered to spot buyers at $1.20 above dated Brent. But only a week ago, it was at $2.15 above dated Brent. So again, they're trying to price that to move. It finally did clear. We don't have the final price yet, but from what I'm hearing, it's between $1.10 and $1.20. Senegal sold a spot of cargo of Gimboa to a buyer in China last week. 2 further spot cargoes for December went to refiners in the Atlantic Basin a week earlier, and a further 7 shipments were allocated. In general, there's still a decent amount sitting on the sidelines. 600,000 barrel shipment of Gimboa sold to a spot buyer. Again, that was offered at $2.10 less dated Brent, which is where that crossed. And that was previous at 50 cents minus dated Brent on October 22nd. So again, you see how quickly things were dropped to try to move it. Angola has sold about half of its planned loadings for December as the pace of sales improves from November's trading cycle, but still remains slower than the previous 6 months. So again, you're starting to see why are you going to increase loading? Why are you going to increase production if this is your backdrop? Republic of Congo, Diano crude is selling slowly. They're sitting on a significant amount, which is one of the issues that we've seen so far. And then Angolan exports were also down, dropping by 187,000 barrels to 995,000 barrels a day. And then Nigeria is the biggest issue that we continue to see as things were dropped for the most part. Combined shipments from the smaller West African producers fell by 9%. 15 to 18 cargoes of Angolan crude for December loadings are still searching for buyers out of 37. That's in line with the typical pace since the monthly trading cycle is halfway complete. But again, that newer number over the last 6 months. And then when you look at Republic of Congo is selling much slower than normal, with 7 of the grade's December shipments looking for customers, which is typically absorbed into China. So the fact that is still available, and it's 7, is a bit concerning of how quickly we're going to see some of these clears in December, as we're starting to see a steeper and steeper discount get rolled into December loadings, even though December contract still remains very, very strong for 2021. Then when you look at 2 out of the 6 November loadings shipments, also yet to locate buyers. So not only do they have all 7 in December, but they still have 2 in November to sell, which is I think a much bigger problem when you're looking at flows. Euros did trade at a 4-month high when you look at where things are. Surgot essentially cleared clean house. We're starting to see that trickle back down. It cleared at about between $1.40 and $1.50. We're starting to see that come a little bit lower, but still above twos. But it's, again, we're going to have to see what's happening. And then ESPO and SoCal is at 24-month highs. That still remains strong and demanded going into those markets. Euros, again, trading, $1.40. And again, a discount to dated Brent. That's something that is the narrowest discount since June, which we talked about last week. Starting to see that come off, but still not back to $2 yet. And remember, when we think about November starts out strong. They want to see where is the market, and then they slowly walk it back to see, okay, well, it's not there again. Well, let's see what comes down. And then they take it down anywhere from 5 cents to 20 cents at a clip just to test what the market looks like. So that ESPO, as we were saying, so some of the rumors was that it was trading at about $6.30. The average traded between $5 and $5.80. We did have one or two cargoes go off at $6.30, but the average was at that $5.80. Which, if you think about what the discount, how long it takes to go from Far East Russia to China versus from the U.S. to China, from the North Sea, Europe to China, you get an idea of even at that premium, it still makes sense just based on insurance, travel time. A lot of those things make it just more effective to go from there. But what we're starting to see are some discounts rolling into Fortes. So Fortes at lower price than previously traded. Then when you look at where things are offered now, it's at 40 cents above dated Brent. It was previously on November 1st at 55 cents. So you're starting to see that walk back, by anywhere between 10 and 15 cents is being adjusted. Now the spot market, Caspian CPC traded at about 30 cents less than dated Brent, which is up by more than $1.50. And that's when you had some issues out of Libya. You had some issues out of availability. You had some ramp ups, which again tighten the market, which is a net positive when you're looking at what is happening for Russia at this moment. But so far now we've seen it come further down, but still not back to that $2. We're still at about 60 to 70 cents below dated Brent. But it's going to be interesting to watch to see now that we're at the front end of the month. We usually see this spike and then this drop off. Again, trying to test that market. And then when we look at what is happening in Fujairah, so let's go back to what's happening in Fujairah. So here you can see there was the total amount reported. We're at 15.584 million. Total stocks fell 126,000 barrels. Light disti fell only 150,000. To come in at 4.918. Then when you look at kind of the backdrop, that draws roughly in line with seasonal norms and leaves the nationwide deficit to the 5-year average mostly unchanged. Again, that's something where light distillates is not where we see a lot of that demand. It's really that middle heavy and resid. So stock of middle distillates rose by 345,000 barrels. Coming in at 3.28. This is a reversal of last week's 594,000 barrels. Asian gas oil grades climbed in the week, started October 31st, supported by the demand that we've seen as a gradual ease back in pandemic. And you've had some spot tenders come out from Sri Lanka, South Africa, and India. And those are going to be that competition between where is the price, where are some of these movements, and we think that'll continue into really through the rest of November. But then on the heavy resid side, fell by 321,000 barrels to 7.386 million. Spot trading on the major bunkering sides slowed in both Singapore and Fujairah. And there was some, Fujairah holding offer positions and not attempting to lower offers. So you're getting some of this competition now because realistically offers should come down. But you're just seeing, okay, well, let's wait it out. Let's wait to see what November holds. And we expect that to come back down. And the reason why is because there will be a build next week. And that'll, I think, incentivize some of these additional movements and price reductions to move some of this product. When you look at crude oil on the water, you had that big spike. We're back, we're near the all-time highs. Seasonally adjusted, we're right there. We expect that to continue, especially because we've had some additional purchases from India. So when you look at crude oil in transit, we're right back at that 5-year average. So crude oil in transit jumped. We still have an abnormal amount of floating storage, but you're starting to see that go into motion. So here's where you can see we've dropped back to 2016 levels. Or if you remember, 2016 was when things got a bit ugly, and you had some of those big increases in floating storage. We're right in the kind of the average for 2021. This is where we expect this to increase, but it could drop one more time before we get that back up. It's going to be a matter of timing. So that's why it's going to be important to, again, look at onshore and offshore to see where things are. But you'll lose a little bit when it's in transit, and then you'll pick it up when it either falls back into floating storage or finally pulls into the onshore. You can see the Brent time spread, Jan-Feb, massive spike to almost $1.35, pared back a bit, but you can see that there's still a lot of strength within the front end of the curve, especially on that backwardation side. So then when you look at refining throughput, run rates within China, on the state-owned side is still very low for this time of year. Typically, we start to see some of these increases, and they're still well below seasonal norms. And that's a regional thing. We're seeing that across the board. Where on the other side, we're seeing teapot refinery run rates at just below 2020 levels, and they're starting to see some of the stabilization, the 72.58%, and you'll see this maintain this run rates because we do have those new facilities coming online that'll help support some of those throughputs in general. Then when you look at WTI and Brent, those December, everybody can't get enough of this front month December versus what 2022 is going to look like, but again, this is something that I think is some opportunity when you get a bigger correction. Now, Singapore, you can see that crack spreads have come down a bit. Prices still remain elevated. So even though we're seeing this, we're still just above zero or just below zero, depending on where you are in that crack. But you can see that, again, we're finding some of that stability, especially on the hydrocracking side, as that demand remains there for diesel and the disti cut. But we normally get here this time of year, so I think it's important to look at where are we versus seasonality. So in a seasonality level, you typically see a run up and then you see some of that drop off. So right now we're seasonally normal when you're looking at that hydrocracking, but then when you factor in the input prices, it's a little bit tighter than what it shows. Things in Europe have come down a bit, but still remain in a position to run additional Urals, which is why we've seen a lot of these Urals start to clear. The fact that they can make gas oil and clear fuel oil makes it a bit easier to increase some of these runs. And then the same can be said for the Mediterranean, though it's a bit more of a bifurcated market where you still don't have the demand for the skimming and topping side, but you do have it for the heavier barrel. So again, this is some of those differentiating factors that we're talking about of what kind of crude is demanded, how is that crude demanded, and I think that's an important backdrop. Then when you look at China supertanker crude imports, this will update on Friday. We expect this to bounce back up to the 5-year average. And then when you look at Asian floating storage, we're coming back down to the 2021 average. We expect this to come down a bit more just because we have a decent amount of flow through that has come in. Some of the additional purchase, again, will reverse back up, and I don't think we'll get back to this high, but I think we're just going to maintain some of this fairly steadiness going forward. I don't think we'll make a new low either. I think we'll come down just a bit. But seasonally speaking, we normally come down a bit. So there's nothing crazy about it, but I think you'll see this replenish fairly quickly. And by fairly quickly, I mean over the next 10 to 14 days. North Sea, back to the highs. This is something that based on where the difficulty in selling, we've talked about the inability to move some of the crudes. This, I think, will remain elevated and push back to the 2021 highs. When you look at West Africa, even with the sales, we're still at seasonally adjusted all-time highs off the 2021 highs, and this is just going to be something in general. We expect this to remain elevated as we go forward and still maintain those seasonally adjusted highs. Middle East had that drop. This is, again, trying to clear some of that additional capacity as they come into the November meeting. This is something that, was the key to watch. So far, they've been able to maintain it. It's been with some price cuts, and it's been essentially to the detriment of the West African crude grades. So this, again, will be, I think, a key factor as well. Europe back above the 5-year average based on where crude is going. This is something that it'll move. Some of this will move onshore. Some of this will move back into the onshore and again, push that ARA up, which is why I think you have to look at the two of them together as they try to manage some of those flows. And then China, Shandong, you can see we're moving a bit lower, coming back to about where we were in 2018. Based on the timing delay, we'll see some of this adjust, and we'll see some of this kind of start drifting back up as some of this crude that is offshore comes onshore. And then when you look at fuel oil, still seasonally adjusted all-time highs, but off the 2021 highs as they try to move some of this into the system. Again, as we've talked about, they've helped rejuvenate some of the local areas, and you're starting to see some of that panic, slow down a bit, but they've also come out and say stock up, and people panicked and ran to the food store. But those are some things that we're going to talk about more in the Econ show, especially on segment 5. If you have any questions, please let us know. We always love the back and forth. I know this was a long segment. I apologize. There was a lot to get through. If you have any questions, please let us know. You can find me on Twitter or in the comments section. Again, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.